Hi traders, welcome to this midweek market review by Trade Genius. We're looking at the UK votes and beyond, so we're actually going to take a look at the wider picture at the moment in the market, despite most eyes being focused on the UK votes in Scotland coming out tomorrow. Just very briefly, so far this week, probably the most notable currency move has been on the Canadian dollar, particularly the USD-CAD, which has started to sell off pretty heavily. It's partly a technical move after a lot of bullish rallies that we've seen in more recent weeks, and also there was some supportive data coming out in Canada which was rather positive, not to mention the fact that this short move seems to be a natural pullback after US dollar currency trades have been rather overbought in recent weeks, and that's obviously in line with the very strong dollar that we've had. Without further ado, let's get straight down to the technicals. Obviously, we mentioned earlier in the week in our technical signals the USDCHF, and in the pre-weekly we also noted the breakout here above 0.9280 levels. These have obviously been part of a technical breakout, although we are seeing the possibilities now that this might be what's called a false breakout in the long term, because there is possibilities of a retracement now back into the previous channel that we just drew. Here you can see now we've moved from the daily to the 4-hour chart, and so we're just showing you the range here. There's the resistance on the up level there at 93.70, and now the support at 93.12. So you have about a 50 pip range or so, and it's showing what's called a possible head and shoulders pattern there. I've shown you with the circles. So any breakout below this line would obviously give rise to a lot more selling pressure and entry levels, and breaks above will allow you to just jump back on that bullish breakout. Okay guys, here we've turned already to the gold, so we're looking at some commodity moves here on a weekly level. This is a long-term outlook for the gold. Obviously it's been hugely sold off over recent years, since the highs just around 1900 levels, and this is actually an inverse head and shoulders pattern, which usually insinuates that there might be a return to buying favoritism on the gold. You can see here the lows around 1200, so any breaks below 1200 there, you might want to continue selling gold, but most investors probably looking for potential buybacks. If we focus in on this support level, it's just coming in right around 1200, 1214 to be precise. And the reason is, if you look back in history, we see December last year, there was quite a big gap there that I've just circled on the left-hand side of this chart. A very big gap in the market, which has kind of, but not properly been filled yet, which gives possible room for the gold to actually retest those levels before it makes any final commitment to rally up once again. Okay, without further ado traders, we've come to the pound dollar. Obviously a lot of people focusing on the news that's coming out. We have the Scottish votes there tomorrow, whether they will get independence from the UK. And on a monthly level, this pound dollar has interestingly been playing out very nicely on technical levels. This is a rising wedge monthly pattern. You can see there playing very nicely on the supports and resistances. I've just shown you now we're at a major previous support level, so there's obviously a lot of room here for the currency to move either way, and the good news is that you can in that respect use safe risk management. Right now we're seeing a gap here. You can see the gap I've just circled for you, and it used to be in January a major support for the pound. So essentially, if this pair starts to move up higher based on negative votes in Scotland, you might expect traders to just simply carry on buying this trade back up towards the 168 highs and the 172 all-time highs for this year. And if we get independence from Scotland, then you may expect to see very heavy selling on this pair from these levels. So both sides offering you good risk and reward, and basically it's about keeping tuned with the data out on the tomorrow's vote. Last but not least, there is a lot of other data coming out in the market, so it's not just about the pound. We have tonight FOMC statement coming out in the US, which is going to be very important for that strong dollar that we've had in recent weeks, and to see whether or not it just resumes or makes a little bit of a pullback. And last but not least, of course, we have the Swiss votes coming out tomorrow in Switzerland on the interest rates. So we looked at the USD CHF already in today's market review. And in the pre-weekly, you can reflect on that if you haven't already seen it. So keep tuned for that data. Alright guys, have a great rest of the week and trade safe.